Capital Allocation here with an overview of the global shipping industry. As you know, the world has been plagued by supply chain issues over the last several years, and due to this fact, the global shipping industry has been making record profits. So today we're going to have an overview of several stocks within the shipping industry from both a fundamental and a technical basis. So the first stock we're going to look at here is A.P. Møller-Mærsk. This is a Danish shipping company. As you can see here, this is the long-term chart. Looking at the dividend yield, it is 14.24%. Many of these stocks have very high dividend yields, and that's why I'm focusing my research on this and trying to bring this information to you. Looking at the fundamentals here, a price to book of 1.5, not too bad. Very low PE ratios here in the 2s. Good current ratio for such a capital intensive industry. This is quite a good debt level, and return on equity almost 50%. So again, very good. These companies are investing in also more sustainable shipping methods, different types of fuels, and basically it's very difficult to compete in such a capital intensive industry, so these companies are likely to maintain their advantage over quite a long period of time. So from a technical perspective, we are still in a downtrend here with a red Ichimoku cloud. Usually this will act as resistance. So personally, I would like to see a little bit of slowing of the momentum and sort of a bottoming pattern before considering this for my personal portfolio. The next stock we're going to look at is Nippon Yusen, which is a Japanese shipping company. The dividend yield on this one is 13.9%. On a fundamental basis, we have a price to book of 1, PE here in the 1.3 to 1.5 range, current ratio of 1.33. Reasonable debt for such a capital intensive industry, and again, very good return on equity. Fundamentally here, we've got a bit of a kind of a Wyckoff distribution pattern, a little bit of a head and shoulders here. It looks like a double top. So quite a few technical indicators to see where we're heading. We also have the 50 moving average crossing below both the 100 and 200 and this red Ichimoku cloud. So it looks like this looks like there could be further downside. This thing's trying to hold up, but really if it breaks down much further, there could be a long way to go before there is support on this one. So again, personally, just being patient here, waiting for a good interesting area to enter and collect these large dividends here. All right, next we have Costco Shipping, a Chinese company. This currently has a dividend yield of 8.46%. Here, looking at the fundamentals, a price to book of 1.22, PE in the 1s, pretty crazy. Current ratio of 1.67, a little bit higher debt here, but 100% return on equity. From a fundamental perspective, as with some of these other stocks, again in a downtrend here, looking to get some more momentum on the upside before I would consider this a buy for my personal portfolio, to definitely mind the technicals and let them catch up with the fundamentals here before entering a position. Mitsui OSK Lines here, a Japanese company. Here the dividend yield is 13.39%. On a fundamental basis, price to book of 0.97, so pretty good there. Low PE, one or in the ones or twos here, depending on how you measure it. Current ratio below 1, so don't like to necessarily see that. Again, a little bit higher debt, but again, with all of these companies, at least recently with these higher shipping rates, have had a great return on equity. So I would like to personally be patient here, wait for the supply chains to at least normalize as much as they're going to, see where these shipping rates go, and kind of watch these positions, listen to the earnings calls, and look at the technicals specifically to find a good entry point. So here again, kind of a head and shoulders pattern here. Definitely looking down on the momentum here on this Ichimoku cloud. You've got this red cloud forming. Generally, that's a bearish sign and will act as resistance, and somewhat of a Wyckoff distribution here. So again, with all of these, for at least me personally, it's not the time to buy until these fundamentals start to, the technicals rather, turn around a bit. The fundamentals look cheap though, and that's why I think these are worth watching. Hapag-Lloyd, German company here, 13.18% dividend. Fundamentally, a little bit higher price to book here, 3, but again, still low PE ratio in the 3s. Good current ratio on this one, good debt, and again, a rather high return on equity here. Interesting one here, just a steady run up. Looks like we're, in my opinion, about to form a head and shoulders here. Left shoulder, the head, and will this be a right shoulder? We do have this red cloud forming. I could definitely see maybe a 50 to 63% Fibonacci retracement here, followed by a rollover in this stock. So that's my base case here, but again, high dividend, so that's why I'm looking at this is for the cash flow here. Kawasaki Kaizen, obviously another Japanese company, 7.89% dividend yield here. Fundamentally below 1 price to book, so pretty good. Look at this. This is crazy. Below a 1 PE here with a good current ratio, reasonable debt for this type of capital intensive industry, and massive return on equity. So pretty interesting one here. And with this pattern, again, looks like we could be seeing a head and shoulders. It looks like we're about to form a red Ichimoku cloud here. Interestingly, every time this starts to go down, it almost looks like shorts are getting squeezed. There's a massive rally. So will we see a short-term rally again? If the previous pattern prevails again, we could see something like that. And will we see a head and shoulders here? The momentum's definitely slowing. So again, just looking for the timing here to collect these dividends. So let me know what you guys think. It's pretty interesting listening to some of these earnings calls. Maersk, actually, the first one I showed, the Danish company, they actually stopped doing business with Russia. They're selling all their assets in Russia. So it's just interesting to see what effect this is really doing to global trade. And it looks like a bifurcation of the East and West here. Unfortunately, I think this is going to do damage to the really the consumers and really all parties. This is a lose-lose situation, but definitely interesting to get a overall investment perspective from what is happening with these shipping companies. So let me know what you guys think. If this was interesting at all, or if you have any suggestions on another industry to look into, let me know in the comments below. Also, if you would consider subscribing, giving a like, that would be much appreciated. So until next time, take care, and I will see you in the next one.